How are you today, buddy?
Pretty good. Can you hear me?
I can, Terry.
All right.
Thanks
Very good.
Yeah, thanks so much. Thanks so much for joining us today. I took a look at your PowerPoint. Yeah, I think it's going to be fantastic. So, why don't you tell our, I know you have this in your intro. Why don't you tell us how you got involved in analyzing markets and having an interest in the market? And I know one of the calls and forecasts and predictions you're real proud of is that you forecasted that Donald Trump would win the presidency well before most. There were a couple that did, like Martin Armstrong did too, and I know you're also a fan of his. But how did you get involved in being a market watcher, market analyst, trader?
Well, I think a lot of it goes back to the financial crisis. I just got really interested in economics and markets and trading back then around that 2007, 2008 time frame. Just started studying a lot, got interested in technical analysis, started out really interested in the gold market, which I'm still interested in now, and I think it's just slowly evolved over time more into this probable range and Murray math work that I'm doing now.
And what tell us how you ended up looking at Murray math as being a way to analyze markets. Did you have any mentor, anyone that pointed your eye towards that method? How did you come upon Murray math?
Well, I think I really just sort of stumbled upon it. Have always been really interested in like W.D. Gann's work and some other people's work. And there's a lot of people, I think, that have got some very similar, they're kind of looking at the same big picture, but I think from different perspectives. So if I kind of go into some of this, but I think Gann, I think Murray, I think both of those guys are kind of looking at things in similar perspectives.
So Murray math also takes into consideration time and not just price. Like Gann thought that time was more important than price.
Well, that's one thing that I think personally I need to do more work on. I think that I have a better handle on the turning points than I do on the time. I think I'm getting better at the time, but I'm not sure that the Murray math, or at least what I've seen of the Murray math, that it necessarily really deals heavily with the time aspect.
Right. And what kind of cycle theory do you implement? I've seen your charts, and you know how sometimes you post a chart in my stream, and your charts at times are very esoteric and very detailed, and someone will come up with a comment like they're tripping on LSD or
right,
and I'm always defending you and your work, and all I could say is to all the people that are naked trader advocates, that instead of criticizing other people, that they should just draw their shades if they're trading naked, and be open to different methodologies, because I've seen you make some great calls. You called the gold break last year too. So why don't we just continue on with your presentation and take it away, Terry.
Okay. Well, yeah, just feel free to interrupt me at any time.
Oh, also, I see. I just did, so you can count on that. Go ahead.
Awesome. Awesome. Yeah, just real briefly about me. Like it says on the screen, I got my BA in political science at the University of Washington. Have basically been self-taught in technical analysis and cycle theory, and really, I mention it not so much to say, oh, I forecast this or not, but actually looking at Trump winning and projecting that he was going to win has kind of combined some of the methods that I'm using now as far as financial markets as well. But basically got a little bit over 80% of the state popular vote winners right, and pretty close to 90% of the electoral college votes correct. And that's basically using this Murray math and some other techniques.
Okay.
And then
what would be like a very quick description of what Murray math is?
A real quick description of it. Basically, Murray math is taking a price range and dividing it into eighths. So if you took the current gold market, you could look at it very simply as a potential high of 2,000, a low of 1,000. You've got $1,000 range. Divide it by 8, you've got $125. And then take your 2,000 would end up becoming the top of your range. It ends up being the 8/8 Murray math level. So you just take 2,000, subtract 125 from it, and just go down until you hit 0.
Okay, interesting.
So,
and what is that? And is that a natural number, or the eighth? Is it a fib number? I know you brought up pi. Pi is a big thing for Armstrong. Why is 1/8 significant?
You know, I don't know that I have a good answer for that, except that it works pretty well.
Fine.
It seems to be kind of one of those natural numbers that just works.
Okay, so there must be some type of harmonic in that number that it repeats like that. But go ahead.
Yeah, I think there's something to that.
Okay. All right.
But yeah, let me just move forward real quick. This is just a sheet. This just shows off one of my spreadsheets the states that were forecasted for which candidate and all that kind of stuff, and who won, and that's just in a little bit more detail. And I'll try to. I haven't done it yet. I'll try to put some of this online too, if anybody wants to go through it a little bit more quickly or a little bit more slowly. And then this was just my electoral college projection. On the left is what I projected, and on the right is what the actual electoral college vote was. So it got fairly close.
Okay.
At least I got the winner right.
Will he be reelected?
Boy, that's a tough one. I don't know. It is so hard to tell right now. I've kind of wondered, and I don't know that this will happen. I've kind of wondered if he got things sort of halfway where he wanted, if he wouldn't just go for a term also, if he wouldn't choose just to be president one term and get out. But I honestly have no idea. Everything's so murky right now.
Okay, I thought I'd throw it out there. Will he be able to complete his term, or is all this Russia stuff going to turn into some type of Watergate situation?
That's a good question too. I tend to think that he'll be okay, but I mean, he's definitely in a precarious situation because he doesn't really have a base of political support. I mean, either the Republicans didn't really want him to be president, and the Democrats definitely don't want him to be president. So he's not in a very, very strong position as far as if they decide to impeach him, whether or not he'd make it through or not.
Yeah, I'm sure there are many establishment Republicans that would rather have Mike Pence in there. But
right.
Yeah. So okay. So this is old news. Great call. Wow. Sources of inspiration. Bradley Cowan.
Right. He wrote a book, and speaking of esoteric, this is pretty esoteric stuff, and it's pretty hard to find any of his books. You can find them on some of your online book retailers and such. But he wrote a book called 4-Dimensional Stock Market Structures and Cycles. Really, really interesting. A lot of what he does is based on geometry, And he also does a lot of stuff which I don't really grasp. I'm not really into, but he does a lot of things with astrology actually. But I'm not really focused on that. I'm not really interested or understand that very well. Okay. But really good book if you can find a copy of it.
Okay.
T.H. Murray.
I think Peter Temple has read every esoteric book possible.
Yeah, that's probably true, isn't it?
Yeah, he even goes to New York to read original manuscripts. I forgot of who, but yeah, he's really into this stuff. So Cowan, and there we have Murray. I'm familiar with that name, and Tony Plummer. He's a GAN guy.
Yeah, that is a really good book if you pick it up. A lot of the ideas I have that I'm using with the probable ranges, a lot of the ideas are based on ideas in his book, in Tony Plummer's book.
Okay.
He really clarifies a lot of things. GAN can be very confusing, and I think GAN himself obscured a lot of his work, and I think people who talk about GAN's work obscure a lot of it, and Plummer makes that more clear than anybody I've read. Okay, as clear as you can make it. It's still a little bit tough to grasp, but.
And Martin Armstrong, who I've interviewed a few times, he certainly keeps his model close to his vest. So can you learn anything about how Marty comes about it? I mean, he has this model that the government wanted. He wouldn't give it to them. He served some time. How do you figure out what Martin is doing besides read what he's thinking?
Right. Well, I think a lot of what Armstrong does. Well, let me back up a step. If you ever look at some of Armstrong's charts where he has his dates and the way he'll write his dates, he might have a number that'll be a date and then 0.75 or 0.825. A lot of those numbers he uses, if you start to look at Murray math, they're very similar. And I don't know which one of, between Armstrong or Murray who started using those numbers first, and I'm sure they were used, way before either one of them was born. But there's a lot of similarities between Murray math's numbers and the dates that Martin Armstrong uses. Okay. So I think if you start to understand Murray math, you start to understand Armstrong's dating a little bit better. And I think Armstrong has pulled in a lot of things. I think he's pulled in a lot of GAN's work. I think Armstrong's another person who's probably, and for good reason, has had to obscure a lot of how his cycles work actually works. And then just wanted to thank you too, Dale, for just all of your support and encouragement. I think it's been really helpful to me, and I really appreciate all your kind words and just backing me up when I have a chart that everybody goes, "What in the heck is that?" Yeah.
Well, glad to serve, and it's easy to be a critic, and I appreciate you tweeting in my stream and some very interesting looks, and I really believe in, like you said, I'm glad I'm an encourager, and thank you very much for acknowledging that. I appreciate it.
Oh, no problem. Yeah, I appreciate everything that you've done. Now, I added this in. I don't know if you had got a chance to look at it. A lot of the work I'm doing right now relates to probable ranges, and the probable ranges. Most of what I do on Twitter is actually designed just to be a day, and they probably tend to be a little bit wider on some things, maybe like gold, than people would find useful on any particular given day. But those
people make a lot of comments about. They make a lot of comments about how wide the probable range is, right? And how they could use them.
And that really relates back to the Murray math. it's sort of designed to, the way I've designed it, to encompass the extreme part of the range. I could make it narrower, and I may try to do that, but it's designed to catch the big swings rather than try to focus down really narrow. And
so this 970 to 1529 is your projected range for the next 23.3 years?
That's right, and that can change because these longer probable ranges, well, and shorter ones for that matter, but these longer probable ranges are based on the daily probable range. So as that moves up or down, that long-term probable range would change as well. But they don't vary hugely, but they can vary.
Okay.
So I think what's useful about this, though, I mean, you can say, well, who cares about 23 years? And you're probably right to an extent. That 1529, for reasons I can get into later, I don't think we'll get anywhere near that anytime soon. I think that's too high. I think that's outside of where the gold price is going to move. But I think the bottom of it's
there is one, yeah, there is one Elliott case that could take it there. Based upon the rally that we had from 1050 to wherever we went, 1380, and
right.
Then we had a pullback and putting in a higher low at 1120. And if we had a fib extension, if this is a C wave or a 3, that we could have, we could get to 1500.
And I think,
go ahead.
I'm sorry. And I think, I don't know if you remember, not to put words into his mouth, but I think Peter Temple might have mentioned that too. I think he's got gold projected up pretty high, and I don't want to, I don't know that I bet money against him, but I just don't think it's going to get that high, but it could. Okay. But I tend to think it's not going to go that high.
Okay. So then this is your view of gold in 23 years. What's the next slide?
Okay. Then the next one is WTI.
Okay.
That's a much shorter time period. That's a much wider range. If you wonder why, and this may be too obscure or not too obscure, but why some of those ranges as your amounts get smaller, your ranges get wider, and that relates to square roots, because the square root is part of the calculation of these probable ranges. So very small numbers tend to be more volatile because the square root, the square root of 16 is 4. So on something that's priced $16, you're talking it could go down to 12 or it could go up to 20. That's right. That's a big move on something that's got a low price.
Yeah, your 3686 number is a big demand zone and retrace level for crude after the rally we had last year, and would still be a higher low by $10-12 if crude came under pressure then.
So yeah, it's kind of interesting. A lot of these numbers keep coming up again and again, and people who use vastly different techniques, I'm always kind of fascinated. I don't look a lot at other people's numbers. Just I try to keep my own unbiased and not get too biased by seeing what other people think. But it always fascinates me when I do how often the numbers will come up again and again where someone is saying basically the same thing and they've got a vastly different technique to do it.
Okay.
And then DXY 90.05 to 111.89, and that's over 15 months.
That seems, both seem possible.
Right. And haven't you mentioned at some point DXY around what, 90, was it 92 or 94? I can't remember where you've talked about it possibly going down to.
Yeah, well, 96 was the election low.
Okay. Right.
Yeah, so, you know, that's a pretty, if it got through 96, it could see 90.
It could see 90, right. Okay.
Yeah.
Okay. And then the last one on there, I believe, is the Dow, around 17,700 all the way up to over 23,600, sometime between now and August of 2018. Those are just bigger probable ranges, just some examples of those.
Okay. Both of those look possible. Okay, so now we're going to get into the Murray Mass. Okay.
This is some bigger, longer term numbers on Murray Math, and so the top level on that Murray Math is actually over 39,000. And
yeah, the Super Bowls have thrown out that 40K number on the Dow. They have. They've thrown it out there. Yeah.
And I think I don't know when the video was from, but I a couple days ago I ran across it again. I think an interview that Martin Armstrong had done talking about the Dow at, I can't remember, it was 43,000 or so.
Oh, yeah, he's talking about a vertical market that stocks are going to become the only safe haven play, U.S. stocks.
And I think it's possible that you could extend out to about 43,200. So I think you could get over the top of this range, but I don't think you're going to get over the top of it by a whole lot, even if it goes vertical.
No.
So I think that around that 39,000's
Where do you think the VIX would be? Minus 30 at 39,000?
Oh, I'm sorry, what's that?
The VIX would be minus 30.
I'm not sure. I can't imagine.
Okay.
I can't imagine what it's going to be at that point.
Yeah. It would go out of existence, maybe.
Right.
Okay.
Right.
All right. So these are your Murray Math levels, and we can see how you went from 1/8 all the way up to 8/8. So what was your starting point? The 0.8 at 0? Right.
And well, the way I'm drawing everything, or the way I've drawn a lot of them, yeah, the 0 ends up being the 0.8 number. Not that we're ever going to 0, but yeah. And they're based on, I don't know that I'm going to go into exactly where the range comes from, but the range is kind of a formula based on a much higher number, which is based on a cycle and an incremental move per day over the course of a multi-year cycle. So it's probably a little bit geeky, but one of the things to note on these ranges too is that between 3/8 and 5/8, your price is going to spend about 40% of the time between those ranges. So that's where to me the Murray Math starts to get useful from a trading perspective, is that you can start to see turns if it starts to get down toward the 3/8. If it's trading between and it gets near your 3/8, you've got a chance at a bounce. And the same if the price on the Dow got up towards 24,437, there's a good chance it's going to come back down, because the 3/8, the 6/8, and the 8/8 tend to be areas where the price momentum will start to slow, whether the price is going up or going down. And that's actually one of the things. Let me go to this other range. Well, probably not this one. This is another one. This is a medium-term Dow Jones, but I'm going to kind of skip over it and go to this next one. I think this is a little more relevant, a little more interesting. The Murray Math, this is more of your current Dow Jones levels, and this is what I'm using a lot when I'm tweeting out these Dow Jones probable ranges. This is some
we're playing a lot with that 5/8 number right now, aren't we?
Yeah, we're not quite getting below it a lot of times. We've been below it and above it a bunch of times, and we also keep bumping up against that 29.25 a lot.
Right.
that 6/8 is a real hard number to stay above. And I think it's going to continue to be. I think we're going to have a hard time making it. I don't know that we'll get above it, or if we do, I don't think we'll stay above it very long. I think we're looking at a trip back down to that 2/8, 19,575.
Okay. Yeah, I've heard, 10% correction would be about 19,000. That'd be about 8%, right? From the highs.
Yeah, that sounds about right.
Yeah. Okay.
Yeah, that sounds about right.
Is that why you have the red arrow there? That's where, that's kind of your target in the next quarter or so?
That's kind of where I think it'll go down to. With the way that my numbers work out, really the Dow was projected really to go about to that 20,250 number, and it stretched out way past it, and it's been over that for a while. But from that 4/8 level, it ought to back up to the 2/8 level.
Okay. Thank you.
I'm sorry.
There we go.
So here's another chart. I guess this is probably more typical of a lot of the charts I've done in the past, although it's probably cleaner than a lot of them. I tried to not make them too packed with stuff. But this is the Dow Jones, and I've got a couple of shift pitchforks stacked one on top of another. And there's also, I'm sorry.
Oh yeah, I just noticed all those. That's an interesting way to display pitchforks.
Right.
You stack them. There's normally just 3 zones, and you have all these zones. Okay.
Right.
Yeah.
Yeah, it's kind of a useful thing for, when the price breaks out of one of your pitchforks, you can just throw another pitchfork on top of it, and the resistance levels and everything work. They work pretty well. They work just the same as in the first pitchfork. But there's also, and it's a little bit hard to see, but you've got like this green channel. This is actually Murray math channels, and you can see the Dow's been trading, running up around the top of that channel for quite a while. It just recently has kind of started to dip down a little bit again, but it's been trading way up toward the top of the channel. It's been making a real strong run. But on the chart, a couple things I find interesting is just that I drew a channel in here, and it's based on one of the things I do a lot too is I use angled lines, and the lines are actually based on Murray math too. The angles are based on Murray math numbers. So this 31-degree angle, because it's the closest I can draw, is based on 3.125, which is sort of the Murray equivalent of pi times 10. So that 31-degree angle has captured a lot of this move higher.
So it's interesting. Blake has been showing a chart like this too, where you have a rising wedge and you have a throw over. It blows through that red line on the top, throw over. And the signal to get short doesn't come until we're back inside the rising wedge.
Right, so, exactly. That's kind of where I was going with it. Yeah, and I think I think at some point we get back in that rising wedge. And one of the things I think that is in here a little bit later in the presentation is I think as we get toward the end of the year, we're obviously running out of room to run on this rising wedge, and I think we're going to drop out of it, and the Dow's going to back up quite a bit.
Okay, so it looks like your bottom line would come in at your Murray level, 19,575.
Right.
Okay.
Right. Yep. Exactly. So.
Okay, and wave guys would call that a wave 4.
Okay. Right.
And then you get wave 5 for another run to new highs.
So basically, my thoughts on the Dow is that once the Dow drops down somewhere around that 19,575, I think it's going to make another run up towards a new high. Whether or not it makes it, I don't know, but I think it's going to I think it's going to try. It's going to try to get up to that 21,600 level.
Yeah.
And I think once it gets up toward that level, I think it's going to break down out of that rising wedge, and it's going to drop quite a bit lower. It at least to 13,500. It could get down below 10,000. It's going to run.
And what cycle tells you that it's going to be bearish until early 2020? Because, you know, a lot of people were talking about 2020 to 2022 back in 2000, that it was a secular bear, even though we've had a cyclical bull, and that it doesn't bottom, their work didn't show a bottom until 2020. What cycle do you have for 2020? Is it a Murray Mad cycle?
Some of this, well, there's a couple of things to it. One of them is there's a 103.2 year stock cycle.
Mm-hmm.
It's kind of based on two 51.6 year cycles. It's kind of a longer, which is kind of a longer version of Armstrong's 8.6 year cycle. But there's a 103.2 year approximately Dow stock cycle. And if you go back, I think I've got this, yeah, on this slide. If you go, and the 2017.9, that's actually Armstrong's number. That's his number, and that's his cycle. But his next point in
that September in 2017 is a important high.
So, well, he doesn't say what it is. So I'm putting my interpretation on it. But that is the next point in his economic confidence model, is that December 1st date. So I'm kind of deducting based on this 103.2 year cycle. If you go back 103.2 years, you actually end up back in August of 1914 when the stock market was closed due to World War I. And when it closed, it was at its low. The 103.2 year cycles an alternating cycle. So back in August of 1914, it was at a low, which means supposedly that the December 2017 ought to be some kind of a pivot high. Okay. So according to the cycle, it ought to peak then and go down.
All right, so yeah, I've also heard that the top is going to be a second half story. So this lines up with that. And you're thinking that 2017.9, does that 0.9 equal the 9th month of the year, September?
No, it actually doesn't. It's actually to sort of grasp those numbers, you actually have to look at trading years and trading months. So you actually have to look at it as there being approximately 251 trading days in a year, and then it's 20 point something or other, I can't remember off the top of my head, trading days per month, and you actually have to do some division to come up with the dates. So the 0.9 is actually December. So yeah, that's another confusing thing about those numbers, is you know, they look like one thing and they're actually another.
Okay. Interesting.
So
I'm learning.
So that's kind of
every day I learn that I know that I don't know.
Me too. Me too. I've got a whole lot more that I don't know than what I do know, but makes it interesting anyhow.
So we have just a couple of minutes left. It's okay if we go a little bit over. Terry, what else do you want to show us?
Okay, well, let's just go into the gold, because I think it's interesting. I've just got a chart on the left is your late 70s early 80s bull market, the
Okay.
top, and on the right is the run up to the 2011 top.
Right.
And they look really similar. They're not exactly the 70s and 80s run up. You don't really have very much of a left shoulder on it, and you have a lot more of a left shoulder on the last big run up. But I think the patterns are really similar, and I think they're going to play out in really similar ways. I really think that
I was actually in the business then. I remember gold and silver peaked on the Russian invasion of Afghanistan.
Oh
And
yeah, I remember as a kid all that. Yeah, that's right.
Don't rub it in. I was in the business. You were in diapers. But the high was 880 in the gold and $50 silver. And I was kind of thinking if gold does resume a bear market, that would be a kind of a natural place for it to go to the previous high of a 20-year bull market. So we were in a bear market for 20 years after 1980, 1979, and maybe it would retrace back to that important top from late 79, 1980.
Yeah, I think it could definitely make a run at it. And I kind of see something similar playing out. I really think that gold is just gonna kind of trade sideways and down for a very long time. I mean, it could be 20 some odd years before it breaks out again and really goes significantly higher.
Okay, because the last bull market started when, in like 1970. I mean, the first bull market I remember, they made it legal for people to own gold in 74. Again, or 75, it opened at 200 and went to 100. And then we had a bull market until 1980. Then we had a bear market until 2000. And then we had a bull market until, 2013.
Right.
So, okay. And so it could be another, at least 15 years from the 2013 high.
Right. And I think there's potential. I mean, it could go all the way out to the late 2030s.
Okay.
I mean, you could be in a bearish market till the 2030s. Of course, I mean, you can trade that channel. I mean, it will go up toward the top and bottom of the channel for many years. I don't think it's going to break.
Your bias is that purple channel.
Yeah.
Okay.
Yeah, that purple channel. And I don't think we're going to get back over here, or we're not going to get back over much. I'm not sure exactly what that is. Up in the 1300s, whatever the last.
Yeah, 1380-ish, I believe.
Yeah, I think that's right. This is just some long-term levels on the gold.
There's that 80, close to 880, the 1.8.
Yeah, you got your top of your channel all the way up over 7,000. What's kind of interesting about this, to me at least, is that 2.8. The gold market did get above that for a while, but
Right.
But it stopped. And I mean, you tend to have trouble getting through your 3/8 and your 6/8 and your 8/8, but it never did get much past this 2/8 level. So I mean, it's got a long ways potentially to run. I would think a lot of people, you read on certain blogs and people who are real pro gold, will say they think gold's going to go to 10,000 or whatever number. I really think, this 5,000 number would be up toward the top of a range. Yeah. I don't see it in the long run getting way past that. I mean, it might, but I think when people start tossing 10,000 around, they're just kind of pulling it out of wherever.
Well, they're getting some funny gas in their bomb shelter.
Right.
But you never know. So, okay, that's a gold long term. Why don't we wrap it up with one more slide, buddy?
take a look at this one. I think is useful. Then this is gold medium term, and I think an interesting number to watch is this 4/8, this 1357. I have a feeling that's about the high. If we see another high up over 13, I think that would be about as high as we'd get. And then I think we could trade, we could trade back down here after that, around that 1131.37. And then after that, it may just bounce around. I mean, at some point, I've thought for a long time it's going to go back under 1,000 at some point.
You still believe it?
I still think it will. Yeah, I still tend to think it will. Yeah, I've just had a feeling for a long time that it would, and I just think that it needs to. I think it just needs to have enough air let out of it before it can really go back up again. I think people have to give up, practically give up on it, and I think it's going to take it pushing below 1,000 before enough people throw up their hands and say they're through with it.
Okay. Yeah, that would be a nice capitulation under 1,000.
Yeah.
There's some guys like Dent and some of the other bears talking 700, 750. But we'll see. I'm going to look at that 1979, 1980 low if it gets there and back up the truck. If I still have a truck then.
Right.
And really, Terry, I appreciate you going through all the effort of putting together a PowerPoint and sharing your numbers. And I hope that pips and subscribers rain down on you, my trading analyst brother.
Well, thank you. I appreciate it.
Everyone thank Terry Kinder. You can follow him at tkinder on Twitter. And if you want to show your first page where they can write down the website to follow some, I would call it creative, unusual work. If you get tired of looking at the same type of conventional stuff, you're going to see some things that are going to stretch your mind out a little bit looking at these things. And everyone thank Terry for coming here and taking his time to share his work and talk a little bit about Murray. Did you get the definition you were looking for, Nicola? Okay, so this is where you can find Terry at tkinder, and there's his website, chartanalysis.silverback.com. Thank you, Terry, buddy. I'll see you on the stream.
Thank you. I appreciate it.
All right, partner. Good hunting.
Thank you.
And with that, I'm going to say goodbye to the crowd. Thank you, everyone, for your contributions today. Thanks for all the screen shares, Luca, Hardianto, everyone else. You're very welcome. I'll see everyone tomorrow. Enjoy your nice, beautiful spring day. We're having one here. You're welcome, Kevin. And remember, most of all, guys, don't just count your pips, count your blessings. I count being part of the FA team, a blessing in my life, and hanging out with everyone in face. So enjoy your day, and we'll see what the world brings us tomorrow. Adios.